Zomedica could triple in price in the coming months. There is a huge catalyst coming out, and I will tell you exactly what to look out for so that you don't miss out on this move. Analysts are also predicting huge revenue growth for Zomedica in the coming years. If you don't know about Zomedica, they are a veterinary diagnostic and pharmaceutical company, and they have been getting a lot of attention recently because of their new technology called truforma. This is a diagnostic testing platform that veterinarians will use, and they are working to develop this technology so that it can work with diabetes and other infectious diseases like rabies. And the more diseases they can get this technology to work with, the more revenue it's going to be able to generate them, and the more valuable this technology will be to veterinarians. Truforma is actually going to be launching this month, which means that they are now going to be able to begin generating revenue, which is a big deal because in 2020, they actually had zero revenue. And actually, an analyst projects $15.5 million in revenue by December 2022, which would likely get them to profitability, if not very close to it. But before then, I expect a catalyst to come out shortly after truforma is launched, as we get more feedback from veterinarians on the product, and what they say will have a big effect on the price, and if it's positive, it will be a huge catalyst to move the stock. There has also been a lot of institutional interest in Zomedica. In the month of February, 14 institutions have added on to their positions, including Royal Bank of Canada, BlackRock, and Morgan Stanley. And just 7 institutions have decreased their positions. I always make it a criteria of mine to be invested into the stocks that have a lot more institutions buying than selling, because they have thousands of analysts working for them and resources that the average retail trader doesn't have access to, so I always want to be invested into stocks with the smart money behind them. Zomedica reported their 2020 year-end results, and they had negative earnings of $16.9 million, but this was an improvement over last year. And a lot of people expected their earnings to be even worse than this. So when the actual results came out that they were better than expected, the stock price gapped up over 13% the next day, which is a real example of the famous saying, buy the rumor, sell the news. Only in this case, it was sell the rumor, buy the news. And speaking of this, the Motley Fool published an article about Zomedica saying they are launching its first product later this month, a diagnostic device called truforma that's intended for use for veterinarian offices. That's a potential catalyst for growth, but it also constitutes a concentrated risk that investors shouldn't discount. After all, if the company's only product launch is weaker than expected, or a major flaw is revealed once the device is being used in the real world, there won't be anything preventing a free fall in stock price. So essentially what they are saying is that Zomedica does indeed have a lot of potential in the future with truforma, but investors should be aware that once the product is released, there could be a lot of selling the news on the date of March 31st when truforma is released. And this buying the rumor, selling the news happens quite often in the stock market, and it's quite similar to what we saw when they released their earnings report. They are also pointing out that truforma is Zomedica's only product, so if it comes in a couple months that this product isn't performing as intended, or there are any major flaws, there won't be anything preventing a fall in price. So they're really banking on this product being successful, and it's very important to know that so that you can understand the risks and potential for upside. Let's take a look at the case for buying it now versus the case for waiting or avoiding the stock altogether. Now here's the argument in favor for Zomedica from the Motley Fool. So truforma is a diagnostic platform that can tell vets several key pieces of information about the health of the feline and canine patients. In particular, it can detect a pet's level of cortisol, thyroid stimulating hormone, and free T4, depending on which test the practitioner chooses. The system has 2 main components, the truforma analyzer machine itself, and the test cassettes that the vets load with biological samples from Fido. Then, the vet pops the cassette into the device and it delivers a readout shortly after. Now this is what makes truforma really special. The true innovation of truforma lies in the fact that clinics don't need to send their samples off to outside labs to get results. While it isn't the only product that fills this role, having the diagnostics in-house means that practitioners can make decisions about patient care much faster, which could lead to better outcomes. In the medical industry, the quicker that you can treat a patient and get ahead of the diseases sooner, you are able to create better treatment options, which often leads to better outcomes. So when Zomedica does launch truforma, it will not be the final product, and they won't just leave truforma out on the market as is. After it launches in March, sales will slowly ramp up through the end of the year. In the meantime, Zomedica will develop and release new tests that are compatible with the machine, expanding its utility to vets. Increasing the device's portfolio of tests is critical, as each new functionality will likely require customers to purchase new consumables on an ongoing basis. In other words, each new diagnostic will increase the potential for recurring revenue, which would increase the stock growth. So the main argument against Zomedica is that, for one, they are not a profitable company yet. The biggest reason to avoid an investment in the short term is that the market may have already priced in the economic impact of the launch of Truforma. So now on the chart of Zomedica, we can see that we are still in this long-term bullish trend. We formed support around $1.70 and had two huge wicks spike down, which were most likely liquidity wicks, which means that there was a lot of buyers in and around these areas. And guys, all of these buy orders have to go somewhere, so it only made sense that we would continue up, especially with the market recovering. Also, if you look at the RSI, we can see that we had this bullish divergence, which is another strong sign that we will continue up, because trading divergences is a really strong indicator that identifies trend continuations and reversals. More recently, we have broken above this resistance level and are pushing up very aggressively. We are actually trading right on this upper Bollinger Band, which is a sign that in the short term we might be overbought, so I will be looking for a higher low to be formed before I personally add on to my position even further. Now dropping down to the 1 hour time frame, we can see that we are continuously making higher highs over the last 3 days, so eventually we have to pull back, and I think that this 50-day EMA will be a very strong support, and this $2.20 support level that we now have will also be another good target. So to continue up to these highs, I would want us to stay above this 50-day EMA, and with Truforma launching in a couple of weeks, there should be a lot of momentum behind the stock to push it up even further. So overall, the technicals look great, and with Truforma launching in a couple of weeks and the institutions buying up shares and the momentum that we have around the stock right now, I think that we will retest the highs that were made. They are without a doubt developing some advanced technology that can make them one of the big players in the animal diagnostics market, which is a growing industry. They are also developing Truforma to make it even better, and so that it can be more compatible with even more diseases, which could potentially bring huge revenue to the company. And in the longer term, if we get positive feedback from Truforma, we can triple in price and hit $6 per share in the coming months. But because there is always a possibility that these companies don't deliver on what they're doing, I don't put more than 2% of my money into any individual penny stock, and I like to keep a diverse portfolio. I almost always sell my position when a company fails a trial or gets a negative catalyst, and I recommend that you guys do the same. So that's my analysis. Consider subscribing if you're new, and leave a comment down below if you enjoyed the video. I'll see you guys next time.